You want it? We have it. The hottest mortgage and real estate strategy broadcast in the nation. A Smarter Way Home with your host, Danielle Boote and Victor Bals. 50 years combined experience, ranked in the top 1% in the nation for home loan originations 2020. Promise to expand your knowledge, utilizing creative mortgage financing and home buying strategies. Build a bridge for a better quality of life. Get your brain cells firing for a smarter way home. And welcome to another episode of A Smarter Way Home. I am Victor Bals, and we discuss modern mortgage solutions and home buying strategies for both our real estate community and consumers alike. Today is going to be a good episode, but before we get there, I want to introduce my co-hostess with the mostest, the loan officer extraordinaire, Mrs. Danielle Boote.
Good morning, Victor. How are you?
I am good today.
The energy you have in the morning, I don't know.
Yeah, well, it's already lunch for me. It's already, 8:30 in the morning? I'm on lunch already.
Yeah,
I'm on my second lunch here. So anyway, Danielle, we got a kind of an exciting show today, and we're going to take people off onto a little tangent and talk about title. So who do we have with us today?
Yes, it is my pleasure to introduce John Carpenter and Jamie Wasil from Cislo Title and Cislo Insurance, based out of the Fenton area, but they have branches in multiple locations. We have known John and Jamie for many, many years through the title and insurance world. So
many transactions.
Long time. I don't know. We go 15 plus years, I'm thinking.
Yeah.
Oh, at least I think.
I don't know.
Yeah. Welcome aboard, John.
Well, hey, thanks for having us, you guys, Danielle, Victor. I gotta start out by saying I'm a little offended. You guys have done how many podcasts now?
This is episode 32.
32? Well, and now we get the invite. This is great, though.
Well,
we're very happy to
Well, you had
here.
to get in line.
So just the first few shows we did, it was just the two of us. And then we started slowly getting guests in, and we're like, okay, this is more fun when we bring people with us. I mean, we could talk for an hour or 30, 40 minutes all by ourselves, but, so.
No, thank you guys so much. We love it. We love being partners with you guys. It's nice to work with companies in the area that do things the right way, and we're proud to be part of it, and we're very happy to be here.
Yeah.
Like Danielle said, I'm John Carpenter, and I have beautiful Jamie Wasil with us.
Hello.
Yeah.
Jamie's been with us 10 years, we decided, right?
Yep, about that.
When you're having fun, you lose track of time.
Yes.
So, yeah.
Flies
Right.
by.
Well, John, let me ask you a question here. So for our listeners here, let's just go back. You do title insurance and other types of insurance. Explain how you got in the business, how long you've been doing this, how you've expanded, and just let us know a little bit about you and your family.
Yeah, we started, John Cislo actually started the company back in 1990, April of 90. And then I joined the team in September of 90. And title insurance is so exciting. I've been in it, what's that make it, 32 years now almost? Yeah,
Wow, the
almost.
90s is 30 years ago now?
Yeah.
My God, am I getting old. Okay, go ahead.
We are old. There's no question about that. So joined the company back then and was going to school, part-time at the University of Michigan Flint campus. And when I graduated, just decided to stay on. And here we are 32 years later.
So how many branches do you have? You're based out of Fenton, but how many branches do you guys have?
So we have 11 branches. We go from one up in Harbor Springs down to Ann Arbor, and of course Brighton here. 11 branches along with the Cislo Title name on it, but we also have 19 joint ventures, partnerships that we have as well. So overall, we're a company of about, if you put all the employees together, we're probably around 120, 130 employees total now.
Very good.
Starting out of Flint, Michigan.
Wow.
Is when John Cislo started back in 1990.
So Jamie, tell us a little bit about yourself and how you got into the business, please.
Well, I have two boys, 11 and 9. I graduated from Michigan State with actually an advertising degree. And then my sister's friend got me into title over in Grand Rapids. And then I moved back over here and went from there.
Did you jog? Because I hear you do a lot of running here. What's going on with that? I hear you do marathons.
I am running actually a marathon in October for pancreatic cancer research.
Really?
Yeah.
So interesting. So you've been in this how long now?
Well, honestly, almost 20 years.
20 years. Well, it takes a pro. So let's get down to title insurance, John. What is title insurance and why would I need it when I'm buying a home?
So that is the $1 million question, right?
Okay.
Most homeowners obviously It's an insurance product that no one really needs unless they are refinancing or purchasing a home. And at that point, they want to have some insurance that when they buy that house, they're the only one that owns it. Nobody's going to come knocking on the door saying, hey, I have an interest in this property once they move in. Well, if someone does come knocking on your door, we're there for you. That's the insurance product that we have.
Okay, so I go buy a home, and now there's a lender's title policy and there's an owner's title policy. Can you explain the differences of those?
Yes. So the owner's policy ensures the buyer that, hey, again, I'm buying my house with no one else having an interest in it.
Mean liens or
Yes,
interest.
Correct. It could be an old deed that could be found from way back when, and someone knocks on the door and says, hey, this is my grandparents' house, and they still own it. So then who gets involved? Who takes care of all that? And that's what that insurance covers. So we're saying to you, homeowner, that you own that property. Nobody else has any interest in it.
Many consumers look at title insurance and say, it's too much money and I don't need it. Until you've been in the business many years. And we have dozens and dozens of war stories, even in our own careers, where there can be serious title problems.
Yeah. So what happens a lot, I'll get phone calls. And again, I've been in the business 32 years. And it nothing makes me more sad, I guess, to say when someone comes in and says, hey, something's going on with my property. This person's saying that they actually own it, or they own this piece of the property. And I said, well, did we do your title work? Did we insure that? Oh, I didn't spend the money to get that, or I didn't want that portion of the cost in the closing itself. Well, if you think about insurance, we have your home and auto, right? Mm-hmm. Pay that auto every month, homeowner insurance every month, depending how you split it up. Title insurance is a one-time fee, okay? Mm-hmm. And in a situation of a purchase, it's customary for the seller to provide the buyer of the property with the owner's policy.
A clear title stating there are no liens on this property. You're good to go.
Yes. So they say, hey, I am going to sell my house to you. And in addition with that, I'm going to provide you an insurance policy that says I can sell it to you and nobody else has an interest in it.
Okay. So now, if a person is getting a mortgage, we also as a lender require a lender's title policy. And that is basically to protect the lender of no liens or encumbrances.
Yes, you'll notice that if you're buying your home or you're refinancing your home, that insurance charge comes to you, the homeowner. Mm-hmm. Okay. Now that is actually an insurance policy that insures the lender. So if you think about it, you want to own your house free and clear. Nobody has an interest. And if you are the bank or the mortgage company, they want to lend you money to that house, and they want to be first in line. They don't want anyone else to have an interest in it because they're working with you.
Okay. So now this, I guess, can pose a problem for cash buyers if they go buy a home cash and they don't spend the money on an owner's title policy. What Pandora's box could they potentially be opening?
So most title companies, they won't close the transaction, excuse me, unless they won't close it unless the insurance policy is there. So if you said, hey, I just need someone to put the paperwork together, put the numbers together, tell us what we need to do, we won't do that unless we insure the property itself.
Are there title companies out there that would close that loan without an owner's title policy?
No, it's very rare.
What about an attorney? Let's say I'm going to go through my attorney. He's going to close it. I'm paying cash. Are they going to require a policy?
They're going to say, hey, I want you to get a policy on this.
Okay, because I did have a client that actually went and paid cash, $280,000 for a home, want to pay cash. 2 years later, he comes back to me to do a refinance, cash out refinance. We pulled title work, and there was a lien on there for $250,000, and he was stuck with the bill. There was a lien on there. How could that have happened, do you think? What could have happened there?
Well, if they didn't do the research on the property. So let me back up a little bit.
Yeah.
So again, going to title insurance and what it is, a lot of people don't know what it is. So physically what we actually do, we're checking the public records. We go back, establish what's called a chain of title. So we see this person owned it. You may have heard of abstracts.
Okay.
They've been around forever. I have an abstract to my house which shows that the property went from the United States of America to, and I live in Fenton.
Okay.
And it went from the United States of America to Clark Dibble. Not many people know that Fenton was called Dibbleville way back when.
Really? Dibbleville?
Dibbleville.
My
Dibbleville.
father dated a girl last name of Dibble.
Correct.
Oh,
You know?
geez.
Yeah. Darlene Dibble was her name. And I don't know how I remember that, but go ahead.
Well, I am full of useless information. So if you guys ever need this stuff, let me know. So anyways, the abstracts were around till probably about the 50s or 60s, and attorneys would do that.
Okay.
So what started happening is that the properties started increasing in value. So if an attorney missed something in their research, then he would be liable for. You'd have to sue the attorney because the abstract was incorrect and that. So then the insurance product came out of it, where you pool money together. Mm-hmm. So you have a big pot to pay any claims that can come out. So
Okay, so you say when you get a title order, I'm going to purchase a home on XYZ Street. You actually go on the public record and you go back for a chain of title. How far back do you go?
So technically, we'll go back 40 years. We'll do a 40-year search.
A 40-year chain.
Sometimes we have to go back further than that.
And what would make sometimes where you have to go back a little further? Why? What would cause that situation?
Well, sometimes you'll see there's a break in the chain, so to speak, and somebody has an interest in the property that should have been taken care of way back when. Okay. So if we go back 40 years, if a family's owned their property, which happens for more than 40 years, I've been in my home for 30 now.
Okay.
So if we only go back 40 and say that interest still pops up, we'd have to go back and research, hey, what happened? Who needs to sign off their interest? Well, who do we need to contact so that we can establish that proper chain of title?
Okay. And so as you create a owner's title policy and you're doing your research, what are some items that commonly pop up? Is it extra people on title? Is there liens from window guys? Or give me some examples of some of the war stories out there, please.
So really what we'll find most of the time, and yes, I'm talking to all the big banks out there, mortgages, past mortgages that were not discharged. And you guys are well aware of what that causes.
Lines of credit.
Yeah.
Like future advance mortgages are the worst.
So what Jamie is talking about, like a home equity line of credit, let me give you an example of out of our Bloomfield Hills office, we did a closing. It's about 10 years ago, I think. We had a person come in. They came to closing. Everything was going good. The seller comes in, signs off on everything. He had a home equity line of credit of about $150,000. At closing, now we call and we say, hey, we're checking. We need what's called a payoff statement from each of the lenders. So he had his first mortgage and then a line of credit behind it. So we received payoff letters from each lender. Okay, no problem. Showed no balance on his home equity. But at closing, he signs a statement to close the account. We also have an affidavit signed saying, hey, he isn't taking any money out or borrowed any money within the last 30 days, 60 days. The issue is that in the public records, there's a gap period. So if we can check as close as we can to, like if we're closing at 10 a.m. this morning, when we have that closing the day before, we'll update it to the best we can with where the county records are. Okay. And that there's a gap between when that something gets recorded and when we can actually find it being recorded.
Right.
Okay. So in this case, this gentleman, I use that term loosely, comes in, signs the closing, signs everything, and walks out the door. Well, when he walked out the door, he went to his bank and took out his $150,000 line of credit and went on his way.
Oh, my gosh.
So we didn't find out about that until the homeowner, the new buyer, said, I've got a foreclosure notice on my house for that guy's $150,000 line of credit.
So what the hell do you do in a situation like that?
So that's where the title insurance comes in. So we stepped in. First American, I know, give them a shout out. They're one of our underwriters. We have First American, North American, Old Republic, and we're getting ready to bring on a couple more.
Okay.
So they stepped in, defended the homeowner, defended the title that they own it, and basically paid that claim off. They went and paid the $150,000 to take care of that line of credit.
Now, do they go after this? Does anybody go after the seller for
Absolutely.
fraud? Okay.
Absolutely. So they took care of the homeowner. Homeowner's good. This is the nice part. They're sleeping good at night now. They're not worried about their house being foreclosed. And then later they went after that particular person and tracked him down in Florida, and I believe he ended up doing some jail time.
Jeez.
Well, okay.
Crazy.
So let's go back to the $150,000. So now, if that person didn't have title insurance, basically there's a claim on that property from that home equity line of credit on that property. They could legally start the foreclosure proceedings on that property, or is it cloudy now because there's a new owner?
Well, they would start foreclosure, and then that would all be meted out in the courts, and it would get ugly. And guess who's paying that attorney fee? That homeowner.
The homeowner.
Yes.
The homeowner. That's very interesting there. So give us an example of other type of clouds that you see. Give us a couple of your war stories.
Oh, I would say one of the biggest is Grandma and Grandpa still have their interest. Maybe they had passed away, and then the family comes in and they're taking care of the house. Well, they did a deed way back when. Well, no, they didn't. So we find that there's that break in chain because kids, stepped in. Maybe they're living there now. They think they have a deed to the property. They're trying
Maybe
to
grandma
sell
and
it.
grandpa didn't have a will.
Correct. Well,
No will.
That's my first question.
No deed.
The biggest question is a lot of people, if you've heard of probate court,
Right.
So a will is only so much. That does not. So if grandpa says, "Hey, I'm going to will this property to Tom," Tom does not legally have the right to sell that property.
Okay.
Not just based on the will.
Right. Well, what I understand about wills is it will go to probate.
Correct.
You
So
know.
wills can always be contested. I think everybody's heard of that. Well, where does it get contested? Could be contested in the probate court.
Okay.
Then it's up to a judge. It's basically a judge looks at the will. The attorney notifies everybody within the will. Then everyone can come in and state their case that they have an interest in the property.
Okay. And then, but now there's quite a difference between a will and then if they have a living trust. Explain the safety of that, or the safety net of a trust.
So going back to the situation with Grandpa and Tom, my first question to Tom would be, hey, is there a trust out there? Because the trust is a tool that allows, so when someone passes away, they're in the trust itself, they have what are called co-successor trustees or a successor trustee. So that legally, if Grandpa and Grandma pass away and Tom's named the successor trustee, he legally has the right to sign on behalf of that and sell the property on behalf of the trust, not them
Without
individually.
probate. So
Without
the trust
probate.
will keep you out of probate.
Correct.
If the property's in the trust.
Now, one thing that we have seen quite a bit in the last year and a half that I have not seen in 30 years
Danielle,
is...
can I interrupt you for just a
Yes.
sec? Jamie, I don't know if you heard, I don't know if you guys heard Jamie say that, but the property has to be in the trust. So that would, in that case, it would have said Grandpa and Grandma deeded the property individually to the Grandma and Grandpa trust.
Okay, that's a super important component.
Yes.
Yeah.
Yes.
And before you go
If
on,
you don't put the property in the trust, whether it's a real estate or a vehicle or even a bank account, the trust doesn't have as much teeth, right, to
correct.
be able to do what it needs to do.
Well, and us as mortgage lenders, many times when we do a refinance transaction, when we get title work from you guys, we find that the home is already in a trust. But we as a lender cannot close in a trust because a trust is an entity.
Well, we can
not-
close in a trust,
Yeah, okay.
but we have to then review and approve the trust before we can close in the trust. So
Or our second option, right, is we quit claim deed it out of the trust at closing, sign all the documents, and then quit claim deed it back into the trust. Right?
Correct.
Now, what was your point, Danielle? You were going down another question there. You were about
When I so
30
rudely
years ago.
interrupted
yeah.
you.
Well, okay, a ladybird
Yes.
deed is another legal instrument to potentially convey title in someone's passing. And I heard of ladybird deeds and saw them 30 years ago, but we didn't hear about them for the last 20 plus years. And now all of a sudden they're getting popular again.
We will see ladybird deeds, and ladybird deeds allow Grandma and Grandpa. It's a deed that they sign, and it basically deeds the property to Tom. But that deed does not go. They'll record it, so they'll be entitled. They'll be the fee simple owner in the property. Ladybird deed goes to Tom upon their death. It activates. Then Tom has the legal right to own the property and sign on the property.
So is a Ladybird deed a good idea?
So I'm not an attorney, Vic.
Yeah. Only when you're drinking.
Well, I did sleep at a Holiday Inn last night, so I don't know if that makes it good or not. But my wife didn't. She wasn't happy with me last night. So honestly, I'm not an attorney. I've been in the business 32 years, so I know a little bit about real estate law. But I am not a licensed attorney.
Okay.
But we have several attorneys that we refer to and can handle a lot of those questions.
Yeah, from an estate planning standpoint, some of the mistakes that we see over the years, and here's the problem with real estate. Yes, it's an asset, but it's also a liability, right? The property may have a mortgage. It certainly has taxes, and probably it should have homeowners insurance, right? So when someone thinks they're giving this to their heirs, there's a lot of responsibility that goes along with that. It's not like giving somebody a car or giving somebody a family vase or something. There are responsibilities behind that property. And one of the things that came out of the downturn in 2008 was fraud guard technology in the mortgage industry. So as an example, before we close a loan for anybody, we have systems that we utilize as a lender that double check somebody's name, and we will find any property that they own, even if they don't disclose it to us. So if we find out that somebody is on a family property up north, right, then we have to start asking questions. And many times when we take somebody's mortgage application, they go, well, I forgot about that. Well, it's mom and dad's property, or it's the family cottage, and yes, all the kids are on it. Well, then we have to go, is there a mortgage on it, and who's paying the tax bill? Because that's a liability, and now we have to include that on somebody's mortgage application. Putting somebody on title, for instance, to a property will actually impact someone's ability to be a first-time home buyer. We could have first-time home buyers that don't own any property, but mom or dad or grandma and grandpa put them on a property somewhere else.
On a Ladybird deed.
Well, it could be any deed.
Or on any deed,
It could be on any deed. So then all of a sudden, that first-time home buyer, by legal definition, is no longer a first-time home buyer.
Because they've had a
Because they're
property
on
in the last,
a property.
in the last
Yeah.
36 months.
Yeah, and the problem is when that loved one passes away, who's taking care of that? I mean, I did have a situation with a client where the son was put on the mom and dad's property. Mom passed away. Then dad passed away. And the house had a mortgage. The house was not in good shape and went into foreclosure, okay, instead of just selling it. But the son was on the deed. So when we did the public records search, it came up that the son had a foreclosure in his name. And I had to prove that it was not his property. I mean, it was super, super, super messy, and there's just so many.
But he's on the deed. How do you prove?
He was on the deed.
But how do you prove it wasn't his property or his responsibility?
I think I had to pull the mortgage from public record to show
He was not on the mortgage.
that he was not on the mortgage, so he was not obligated to pay. But you go, okay, it's great to will something to somebody, but if they don't want the house and they don't want to take care of that mortgage, you then are passing off a liability, not necessarily a free and clear property. Or how about, I had heard recently of a family that owned a compound up north. So grandpa had money, and he had a very large parcel of land in northern Michigan. He built a homestead up there, and then he built houses. We're talking a lot of acreage here. So grandpa's got the house. Then literally there were all these smaller homes on the acreage for all the family to come up. Okay. Well, the parent, whoever owned it passed away, wills it to all the children or the grandchildren, and this is a big family. Well, guess what? The majority of the family members could not afford to own or maintain any of that property. And you didn't have individual properties that people were being willed. You had this parcel with multiple homes. Well, what ended up happening is there was one sibling that had assets that wanted to keep the property. So all the other siblings sold their interest in the property to the brother or the uncle or whoever it was, because even all the properties, what are you going to do with that many homes that need roofs, right? Or you need a septic field or a new well or something of that nature. You know, most people that get willed property can't afford what they're getting. And if you're in a situation, you know, when I heard that crazy story about up north, I thought, well, somebody should have put it in a trust, right? And that grandpa should have funded the trust to keep it in, you know, and then have somebody be the trustee to maintain the property and fund it. But you go, otherwise, if you wouldn't have had one wealthier family member, you know, you couldn't have kept that in the family.
Question then, and so that was, so there's a Ladybird deed where I may inherit that house, but I inherit all the responsibilities that come with that house. Yep. Would it have been better for Grandpa to have a trust and put it in the trust?
I think so. Well, I personally am a big fan of trusts. And I think that most people, and I think what's really scary nowadays are those legal websites where somebody just goes, oh, here, I'm going to do my will. You know, I'm going to save $500. I'm going to save $1,000. And you go, well, you know, you've got to be really careful with that stuff.
Well, here, let's go back to those deeds, because I hear of people trying to draw up their own Ladybird deeds, quick claim deeds, they call them, quick claim deeds. Not
Let's clarify that is quit with a T.
Yes.
Quick claim.
But so now these people draw them up, but it has to be worded correctly. And there's some verbiage in there.
Well, it's interesting you bring that up. I just sat with one of my examiners, and that's one of our employees that goes back and does the research we talked about, 40 years. And it's a large parcel up towards Linden, and a couple pieces here and there, and they did their own deeds, and they didn't do it properly, so we're going back and cleaning it all up. Oh, now, we are doing the closing because they're selling part of the property, so that allows us to actually help clean it up. It was to the point where it was almost like, hey, should we have a real estate attorney get involved on this? I think the family members that are all involved decided, hey, no, we think we're good. So we're putting all the deeds together for just to sell the property, to clean it all up for them as well.
Well, legal descriptions, particularly if you have what is called a meets and bounds legal description, a larger parcel of land, not in, for instance, a subdivision, we do see people that change those legal descriptions from time to time. And that's a very complicated process between getting a survey, going to the township and the county, rewriting the legal description, and mistakes can be made, you know.
Definitely. And that's something we run into a lot, especially towards, on the chain of lakes, where the bottom of the lake is actually owned by somebody else.
Yeah.
They can't do anything with it, but it's owned by somebody. But what it affects is the lakefront property. As a lender, if you're going to appraise a house on Portage Lake, and it's on the water, technically, but their legal description doesn't actually touch the water. So there's a gap there. So how does that get appraised? Is it waterfront property or isn't? So it can be we've worked a lot on a lot of transactions where we talk to the owner of the bottom of the lake, and through the years he's deeded from the property out to the middle, riparian rights, all that. We can get into that maybe on another podcast, but we've helped clean that up.
And there's actually a lot of that situation in Livingston County. And Absolutely. If you're buying a lake property and don't get a survey, you have no idea what you're buying.
Okay, go back to that legal description, because you guys, the meets and bounds. So if there was one error on one number that went off on something like that, what does that cause? You know, what kind of problems does that cause? Because I know of people, I'm going through one of my clients right now that they split the property, but they're having some errors in it, and it's just been taking months here to try to clean this mess up here. So what can happen how does it get recorded wrong?
So think back. I mean, the technology nowadays is so much different than it was way back when. I've seen legal descriptions where they describe the property starting at the corner of such and such roads, follow the fence line to the big oak tree out in the back, and down the creek. So you can see where all the variations could happen. Okay.
The oak tree dies.
When tornado comes through, oak tree dies. You have a massive flood. Creek changes its course. All that. Yeah. So it's not an exact science. Okay. You'll see, and you can find sometimes that your legal description which has come down through the deeds through the years, might not exactly match what your assessed description is, which is a description that the township or the city has.
So do you find more problems in people who've owned these homes for 30, 40 years and now they're going to sell?
Well, I'm full of stories this
Oh,
morning.
Man, that's why you're here, man. Well, give me a story, John.
If I'm boring you, just raise your hand or hit me. Throw your
Yeah.
water bottle at me. In the city of Fenton, where I live, back in 95, they changed the old plat. So we were talking about meets and bound descriptions, right? So a lot of people live in subdivision. Well, what does that mean? Your subdivision has a meets and bounds description
For the entire
for the
sub.
sub, but then it breaks it into lot 1, lot 2, lot 3.
Okay.
That gets recorded. That's recorded. So way back when, Davis and Thompson's north addition to the city of Fenton, which was recorded in 1910, it was not real exact. So the city went in.
It was the oak tree down to the flagpole.
Yeah.
Okay.
So the city went in and created Assessor's Plat number 8 in 95 to clean it all up. Mm-hmm. Well, there's a couple lots out there, houses. The people have lived there. Our particular client's been there 40 years. Remember the time frame we've talked about. And so the lots were shifted from what they were, one lot. So her mortgage is on the neighbor's lot. The neighbor behind her, he actually still owns her lot because the lot they did back when, there's been a mixture between the old legal descriptions from the first plat that was done back in 1910 and companies using the new legal descriptions in 95. So they're all they all cross each other's property lines, which she was kind of nervous about because she's like, I don't own my house. I said, well, technically you don't because your neighbor behind you owns your property. I said, but what the good news is that you own your neighbor's house and they have a pool. You don't.
Oh my gosh. So that would be a big problem when somebody goes to sell.
Oh,
which is probably now when they've been there
exactly
for
what's
40
happening.
years.
Yeah. So in our conversations with the city, we're like, hey, and we haven't come up with that before. Well, the issue is most of the people that live on that particular block, they've been there 30 years, 40 years.
Okay. So it's coming.
Yes. Yeah.
Well, what we're doing, we're going to try and help clean it all up. Right now we're in contact with our underwriting attorneys just to see. We want to do this as they want to sell. So we're trying to guide them to do it as cheaply and quickly as possible.
Right.
Which means you'll have to engage with your neighbors and their mortgage companies to do partial releases of the mortgage.
Okay, so this could
it's a mess.
This
It
could
be a
cause
mess.
a real dilemma because if that seller in that sub says, look, man, it's a hot market. I'm going to sell my house right now. He gets under contract. That buyer probably has a interest rate locked for 30 or 45 days. And all of a sudden they pull title and find out we got a cloud that could actually take months to get through.
Oh, that happens a lot. And in this case, luckily, she's obviously been there 40 years, so she's been retired, and they're moving to Missouri, I think. So there's time. Okay. I mean, she's got time to get this done. She's in no hurry.
But
she does want to take advantage of this market.
Right.
So
Yeah.
you bring up
Understood.
a good point.
Well, now let's talk about our real estate agents. They're out there going on listing appointments. I would think it would be very wise if they're going to have that listing conversation that, you know what, we should call Cislo and pull pre-title to find out, are there going to be any roadblocks if we attempt to sell this property? Do you guys do that?
That's exactly what our client did. So
Okay.
he's been working with that homeowner to list the house. And they've been there a long time. And the homeowner knew there were some issues with the property lines a little bit from 95 when they redid the plat.
But they don't think about how it affects
They
the
don't know.
mortgage and what all the things that are recorded against that property.
Yeah.
You know.
So Andy came to me, Andy at Keller Williams in Grand Blanc, came to me and said,
Andy Elder.
not Elger.
Oh, okay.
Andy Smith. So Andy Elger I know very well. We went to high school together. Go Eagles, right, Andy? Linden, by the way. So so I told Andy, I said, why don't we do this? Let's bring in the homeowner and her daughter. Let's sit down and go through. If we try to do this by phone, they're not going to understand.
Not gonna get it.
So we had all the drawings and went through and it fully explained what was going on, and they understood what needed to be done. And really, just kind of what we're doing today, talked about title insurance and how this all works. And they were asking about how far back do you guys check? 4 years at least, that sort of thing.
So as we go back and talk about, these agents going for these listings, that it's a good idea for pre-title. Does this cost anything to do pre-title at this point?
Luckily, most of them will do pre-title and they close.
Okay.
So we like to do the research ahead of time as well. We think it's worth it because of the time frame. Sometimes we find some things, and that while it's being listed, while it's out there being shown, people are looking at it. On the backside, we're all working together to try and get the title clear, establish that chain of title and that.
You brought up a point there that one of the most common clouds you see on title is mortgages not being discharged. Now, because I had a client here, and a lot of this goes back to the 2008 mortgage meltdown, where we're trying to do a refinance or a purchase of a home. They pull up title, and there's still a mortgage that was never discharged 15 years ago, and that bank bellied up and went under. How do you deal with that situation? What are our options?
Well, as you know, a lot of banks have merged, they're going out of business and that. So there are remedies for that. Now, depending on the age of, like, the home equity line of credit, usually about 15 years. So we make a decision as an insurance company. We get paid. John Cislo always said this to me, through the years being in the business. We're an insurance company. We get paid to take risks.
Yeah.
Now, we qualify those risks, and if we feel like it's worth it, if there's a HELOC out there, home equity line of credit, that's 15 years old, our underwriters would love us to exhaust every opportunity to get these, to find the bank or have it officially discharged. But like you just mentioned.
And if you can't find that bank, what happens?
So if it's old enough, like if it's 20, 25 years old, then we make a decision. Hey, do we want to insure over it? Meaning, the chances are there being money owed on it is slim because, one, it's 25 years old over the 15-year mark.
Right.
And the bank is probably out of business.
They might be still in business, but again, sometimes it's hard finding them because it went from the sale. Some of the banks that we deal with have been sold and bought
Three, four,
four
five
times
in the last 15
So now
years.
you say that you will underwrite and you will insure it over that undischarged mortgage. Does that mortgage does it go in the record that that's clean now? Or is it, if somebody else goes into it, now there's another title company, they may say, we're not going to insure over it. Does it ever get discharged in public record?
Some of them no. Because you can't find a bank to sign off on it. To really clean that title, you have to do what's called a quiet title.
Okay.
Which basically you go to an attorney and they basically notify everybody. They'll do a search. We'll provide a search to them. And then they basically notify anybody that may have an interest in that property. If you do, come tell us what it is. That bank that may or may not be there, they have an opportunity to say, oh, there's a $15,000 balance on this. Great. Let's figure this out then.
And if they don't respond in a timely manner or X amount of days, then it's considered quiet?
Correct.
Very interesting.
Which is going back to that example in Fenton, which is one of the options that we've talked about. If we can't get people to
But now
sign.
We're going to court. Now there's a cost. And it's probably going to be to that homeowner to get that quiet title.
Correct. Yeah.
Wow. Very interesting.
Our attorneys, they don't work for free. So
Right. That's very interesting. Wow. Hey, I don't want to switch. I guess I do want to switch topics here. You were talking about pulling title insurance on all this. Mineral rights. Let's talk about that. Mineral rights come with the property. Explain that to a client, because I've had transactions where the seller is trying to retain mineral rights. What happens there?
So obviously down in Southeast Michigan, there's a lot of developed property, population's much higher. So the reality is that, yes, like technically I own the mineral rights in the city of Fenton, where my house is. Do I have the right to put an oil well in there? No.
Okay.
So there's a lot of restrictions. And an example, a few years back out in Sterling Heights in Macomb County, there's a subdivision, and then right next to it was property, and the guy wanted to put an oil well in there.
Uh-huh.
And so he had the mineral rights. He does own the mineral rights down there. But in the end, he couldn't get a permit from the county to put an operation in like that because of zoning and all of that. So yeah, you might own those mineral rights down there, but you might not be able to extract anything.
Let me go down another rabbit hole. So Joe owns the mineral rights on Sally's property, right? He can't get a permit to drill a well, but Joe somehow got in a legal situation and he's in hock or he's in debt there, and someone goes out there and puts a lien on his property for the mineral rights. Would that create a cloud on that title?
Yeah, that does create a cloud.
Huh.
It's not one that can't be taken care of.
Okay.
I mean, it won't hold anything up, but ultimately it could take you could have to go to court to remedy that situation.
Wow.
But it could hold up. So up north, there's a lot of, let's say north of Bay City, up in the tip of the mitt. There's a lot of natural gas wells and oil wells up that way. And I do know people that have had property, like we were talking about, willed to them or deeded to them from their parents. They maintain the mineral rights, and they still receive a residual check every 3 months, every quarter, for the value of the oil or gas that was drawn out of there.
Wow. And, okay, so I buy the home, or I have the mineral rights on your house, right? Could I then pass those mineral rights on to my heirs if I die? And then what happens if all of a sudden they go out of the country? Is their names on there? Does that create another cloud?
That's a cloud.
Okay.
And I'm
just getting creative cloudiness here.
You're creating big clouds.
Well, but I think people would probably create these naturally, unknowingly, of what problems
Well,
are
they
going to
do.
create.
I had a friend call me a couple years ago, and he had bought a property up north, little cabin in the woods somewhere, not worth a ton of money, but he bought it with a couple of buddies on land contract. Well, they paid the land contract off and never got the deed or never got it recorded. And he called me, and I was like, oh my God, if that seller ever dies and you don't have the deed and you never recorded the land contract in the first place, you're going to be arguing with the seller's estate and whoever was left behind. And I think that there's, particularly in northern Michigan, where things can be very casual, I think there's a lot of issues like that. And people unknowingly go, yeah, here, I'll give you $100 a month for your cottage and call it good. And we'll sign a piece of paper on the back of a napkin or an envelope or something like that. And you go, that is not legal. You've got no backbone. And the thing, a lot of people go, okay, land contracts. Okay, let's talk about land contracts. We don't see them frequently today. They were very popular in the 1970s and the 1980s.
Correct.
When interest rates were double digits. Mm-hmm. So what a land contract is a contract between a buyer and a seller, right, to purchase the property at an agreed upon price, interest rate, and a payment structure. But typically with a land contract, the deed does not go to the new buyer until the property is paid in full. And
Correct.
if you don't use some of the legal tools that we have today, such as recording with the county, possibly a title company holding a deed, you can have a lot of issues down the road because it's he said, she said kind of a situation. And if somebody passes away, you're in trouble.
Yeah, so if you think about it, a land contract is a form of seller financing, right?
Mm-hmm.
So they hold the terms with the buyers. What we see a lot of times and are asked to do is there'll be a land contract, but we'll hold the actual warranty deed that needs to be recorded we'll hold that in escrow. And a lot of times we'll hold what a lot of people don't think about are the transfer taxes that are done when a deed's recorded. We'll hold that in escrow as well. So those
Until
are
the
ways.
land contract is paid off.
Correct. So we need a release from the seller. He needs to state, hey, this is paid off.
Yep.
We'll have the buyer, the land contract buyer, and the seller say, hey, everything's been satisfied. Please send the deed in for recording.
One of the problems we see with land contracts, and these are the nightmare stories, of course, I'm going to go down another rabbit hole, is, John, I sell you my house on a land contract because maybe you weren't able to get financing somewhere else, so I sell it to you on a land contract, and you're paying me, I don't know, $1,000 a month for the next X amount of months here, but yet I have a mortgage on there, right? And I'm collecting the money from you, but I am not paying my mortgage company. What has to happen there? I have to get permission from my mortgage company to sell that on a land contract.
Correct. A lot of people, obviously, a lot of people been in closings, and there's a lot of paperwork. So when you're at closing, as a title company, we'll hit the finer points of a mortgage, but a lot of people don't know that there's a due on sale clause in there, which basically means, hey, if you don't own this property or you sell any interest in the property, the bank can call your note due, or the mortgage company can call your note due.
Okay, but I see some gray clouds coming here, because if I sold this to you on a land contract, you're giving me payments. I don't make my payment to the mortgage company. They start to foreclose on me, but how can they foreclose on me when you're on title?
You're not on title. If you bought it on land contract, you're not on title.
Until it's paid off.
But
there's a recorded memorandum of a land contract.
Not always.
Not always.
Not always. So a lot of times, a seller, knowing that he has a mortgage on it, they don't close with the title company. They don't record the land contract, and there's no deed transfer. So in that case, the potential buyer could be at risk to lose all of the money, any down payment and any payments that were made, because other than an unrecorded document, you have no legal recourse. That lender is going to come in and foreclose if that seller did not keep his mortgage paid to date.
Well, welcome back to 2008.
Yes.
Okay.
Yeah.
That happened a lot.
A ton.
People are in their home. They're making their payment to the land contract holder.
Right.
Well, as Vic said, he's not making the payment to his mortgage company.
Right.
And all of a sudden they get an eviction notice because they're foreclosing.
Yeah.
So that happened a lot.
Yeah.
I think lenders have gotten a little, I say that, big lenders have gotten a little more intelligent after learning the experience from 2008 to 2010. They don't necessarily want that property back, because now they're holding on to it. They have to pay the property taxes, and they have to try and sell it.
And maintain it.
So they don't really want the property back. So I think there was a growth process that was done that say, hey, in a situation like that, some lenders will work with that land contract purchaser, not just throw them out, because now they've got someone still in the house taking care of it, and they're doing their legal things on the backside to remedy it with the seller that wasn't, or the owner that wasn't paying it. So things have changed a little bit.
The nice thing about the title company, though, and how they handle things in Michigan, and realize in other states title is handled very, very different. But for instance, the title company acts as a verifier at closing. Okay, so when the buyer comes to the table and the seller comes to the table, in addition to all the research that you do on the property prior to closing, you're also going to identify everybody that shows up at the table, correct?
Correct.
They have to provide a photo ID to say, I am Mr. Seller, I am Mrs. Seller, I am Mr. Buyer, Mrs. Buyer, whatever, so that we know as a lender, you are protecting our interest by making sure the buyer is who they're supposed to be, and that you're also making sure the seller who is there as they're supposed to be. Unfortunately, mortgage fraud and real estate fraud is a huge issue in the United States. I have heard crazy stories where a couple show up at a closing. Maybe the gentleman is on title, the gentleman with his wife, he's on the mortgage, he's selling the property, and guess what? He brings his girlfriend with him to try to sign off on the property. I mean, as crazy as that seems in 2022, it still happens.
You guys want to hear another story?
Sure.
Yes,
I love stories.
yeah.
Yeah.
I knew I might trigger something with.
I just have to say, I love it. You guys actually want to listen to me.
Hey,
I don't get that very often.
I'm almost like the wife you want.
Well, not quite, but
Only when you're drinking.
and buying. So let me go back to Danielle brought up a very, very important point about IDs. And she is correct. We do act as a verifier. We're hired to take, back in the 80s, the lenders did their own closings.
Yeah.
Real estate companies did their own closings.
Yeah,
And
we
then
used to
they
do our own
decided-
closings.
Yeah.
So, and that meant them putting all the paperwork together. All that liability fell on their shoulders. Mm-hmm. And they decided, hey, let's let the experts in the title industry business do that. So you mentioned a couple things. One, each state is different. Some are very similar. The insurance product generally works the same, but who actually closes the deals? If you go to Illinois, it's an attorney state, so everything flows through attorneys. My cousin lives down in Atlanta and is an agent down there. That's an attorney state. So he doesn't even order title work. The attorney does. And the attorney does all the paperwork, holds all the escrows and all that.
Wow.
So it's a little different that way. Same process. It's just who's doing it. But going back to the ID, yes, Danielle, IDs, we need them. But important, it has to be a valid ID. So if you're driving around on an expired license and you want to go refinance your house, you need to get that taken care of before you come in and sign.
Absolutely. Yeah,
It's got to be valid.
Yeah, and we see a lot of expired stuff. You ain't closed until you get a new one.
Yeah.
Right,
You know?
right. So real quick, that story that you guys wanted to hear. This happened out of and I actually was doing the closing. This is probably about 20 years ago, 25. Man, I am aging myself. Gentleman came in with his wife to sign on a refi. So we go through all the paperwork, and then at the end of it, I said, okay, I need your IDs. He's like, oh, I left it out in the car. She left it out in the car. We'll be right back. They went outside and left.
Oh my God.
Never came back in. So I don't know if it wasn't his wife. I don't know what was going on. Maybe it was. Maybe they weren't happy with the terms or whatever, but they never came back in. So,
Wow.
So I talked to our client about it. He said he never heard from him again either.
Oh my goodness.
Mortgage fraud knocking on the door.
Yeah.
Absolutely.
Yeah.
Wow, interesting. So, hey, we're talking about land contracts here. So, and I think these are going to become a little bit more popular, especially maybe between family members or something like that. Hey, I'm going to buy grandma's house. Hey, I don't need a realtor. We'll just do it. Or I can't get financing. I'll just sell it to you on a land contract. Do you and your staff have the legal capacity to help these people walk through land contracts with the proper verbiage?
We do. So we'll get people knock on the door and say, hey, we don't really need an attorney or a real estate agent involved here because it's family. And so that's called a for sale by owner. And so we do have that, but we always recommend them to consult with a real estate agent.
You know, it's funny because we've had this conversation on other shows, and and we talked about that. Clients will say, "Hey, they're real estate. All the agent did was open the door for me," and our response is, "That's what you want to think is all that agent did was open the door, man, because." It's just a whirlwind of all the stuff that they have to do behind the scenes.
I think if people stop looking at it that way and looked at it as, hey, I've got a sales force out there trying to sell my house, even if I'm not listing it.
Right.
You can work with them. They'll bring buyers to you. Yep. So that's part of your sales team to
absolutely. But I tell you, these agents, they earn it. Everybody in this industry earns it.
Absolutely.
There's a lot of work that gets involved there, man.
We love working. There's so many agents, obviously, that we know. To see how they take care of their clients, it's pretty cool.
Well, there's a lot of moving pieces, even on the seller side of things. And honestly, as lenders, Vic and I cringe sometimes when we get a for sale by owner because there's nobody taking care of the details. Somebody's got to take care of the seller. Somebody's got to take care of the buyer. And our job is just to get the mortgage approved.
Yeah. And then we got the addendums. Who schedules the inspections, the appraisals. It just gets...
telling the seller to get the payoff. Or, yes, you better call the title company.
And now there's a cloud on the title.
Yeah.
My God, that gets crazy.
It's the same thing on our side. And that's why the closing fees, people wonder why our closing fees are higher on for sale by owners.
Yeah.
It's because there's more work involved. A lot more
And
work
so many times we'll hang up the phone and be like, and that's why you have a realtor.
Yes.
Every single time.
Yeah.
Absolutely. We all got our place in the cookie jar there to help get that.
And ultimately the thing that's funny right now with people, we don't really see a lot of for sale by owners, honestly. But what we have seen, there's been a couple that I've seen maybe in the last year, and they're selling the house for a lot less than it's really worth because they don't understand what the market conditions are, how the market is moving.
That's a great point.
Yeah, and in these for sale by owners, they don't understand how to create a market of multi-offers and get that top dollar for the properties.
And if you don't know the seller, how do you know that you're going to trust somebody? I had a deal probably 10, 15 years ago. I had a client write an offer on a for sale by owner, and the seller went and turned around and sold the house to somebody else.
Wow.
While the buyer was in contract. And I think somebody showed up with a higher offer in cash or something ridiculous like that. So the seller signed a second contract And the buyer was on track to close. There was nothing wrong with the transaction, but the seller was just not easy to deal with. It was obviously not an honest person, and he went and sold it. And the only remedy that buyer, the first buyer, would have had was to turn around and sue him. But then you're paying attorney fees, and if the property's already been sold, what are you going to do with that? Not much.
Wow.
Not much.
You could contact Abby Cooper and sue them to perform on that purchase agreement.
Yeah, but it was just a nightmare. And again, you don't know what you don't know about these other people you're dealing with. And the real estate is tricky. It's not always cut and dry. There are problems that come up throughout the process that have to be worked on, negotiated. I mean, I have a deal right now where the inspection didn't go well and the septic field is in question. The agents are working really hard, getting second opinions, getting quotes, trying to figure out if the buyer is still going to buy and what's the seller going to do to remedy the problems. And you go, you know what, if you didn't have real estate agents involved, it wouldn't even get that far, to go, what are we really dealing with here?
Yeah, back to a point Vic made about a lot of homeowners dissing real estate agents in that. I think the public just needs to keep in mind that, yes, there's a few bad apples everywhere. There's a few bad apples in title, like me. No, I'm kidding. Yeah. There are a few bad apples, so don't let a bad experience with a particular agent cloud your judgment.
Yeah.
Because there's some really...
Or your title.
Yep. Mm-hmm. There's some really, really, really good agents out there.
Yep.
Yeah. And I look at you guys as the traffic cops of the industry, man. You're looking out to protect everybody, the agents, the lenders, the borrowers, the sellers. And that's what we need for that conduit to bring it all together, because I tell you, I've worked with you for 20 years,
and you've loved every minute of it.
Absolutely. But hey, let's segue off to one other direction. You also do homeowners insurance and auto insurance.
Yes.
Now
we've added that to our portfolio.
Okay. So tell us a little bit about that. So you can also offer our clients courtesy quotes when we order title for their homeowners insurance. Is that correct?
Absolutely.
How does this work?
So it's a natural fit. We're an insurance company. We've been doing title insurance for 32 years. And we just thought, hey, how can we create something that adds value to the company, but also gives an avenue as we grow? And it's the get rich slow plan is what I'd like to call it. And that's okay. We're doing it right, and we're learning along the way. We did partner with a company, Vicky, who has an agency out in Grant and Ledge. She's a partner with us. Now, she's been in the business, 40 years?
For insurance or title?
For homeowners insurance.
Okay.
We call it P&C, which is property and casualty.
Okay.
So she's been in the business all that time and has worked with us, and we run everything through, we get her opinions on everything. Mm-hmm. So it's not like we're a bunch of title guys jumping into the P&C business. Right. We've got knowledge behind us.
Yeah, you're bringing them to you, with you.
Yeah.
Partner up.
Yeah.
Okay. Hey, now we had a conversation before we started here about leases on auto leases and that, about paying them off early, because I was concerned, hey, I want to pay off my lease. I just hate having payments.
And I have prepaid leases before too. So the comment we made before the show was I have prepaid leases and in the years past, and someone told me not to do that because if you prepay the lease and the vehicle is totaled for any reason, you will not get reimbursed from the insurance company on your prepaid payments.
Well, you're going to buy the car anyways, right? So
I mean, if the plan was to lease it for 2 years and give it back, okay, and I prepaid it, and it gets totaled 18 months into the lease.
Oh, gotcha. No, you have your insurance policy. But even though you prepaid that lease, you're still going to maintain that auto insurance policy. So technically, in a lease situation, technically you don't own the car. It's like renting a home, right? Or leasing a home. But you still are required to keep that. If they find it's like a house. If your lender on a house finds you not keeping it insured, they can call your note due. That's part of like the due on sale
clauses.
Does
it depend on the market value of the vehicle?
No.
When it's totaled, not on a lease.
When it's totaled, it depends what policy you have, but it's replacement cost.
Okay.
To replace that vehicle.
So I get a brand new car at $40,000. I prepay that lease. 6 months in, I total the car. Insurance is either going to fix it or they're going to consider it totaled. And they would give me replacement cost off a brand new one, same model.
Yeah.
Okay.
If you have guaranteed replacement.
Yes.
So what would you look at for on an insurance policy to make sure I have that type of coverage? Or
So it depending on the policy that you get, and depending on what the leasing company expects, but it's a replacement cost to the value of the car itself, and the value of the car could be, what's it going to take to replace that car at today's current market price. So that's what the coverage will allow. So if you look on the policy, it'll talk about replacement cost, and then that's where you'll find it.
okay. And then so you handle the home and the auto, and what does it take to get a homeowner's insurance quote? Do you just need a property address? Do you need these people's social security number? What do you need for someone to get a courtesy quote?
So it's very few simple questions. If you guys ever look at, when you have your insurance, if you look on your deck page, that's the information. If, say, one of your clients, we have the opportunity to speak to them, to provide them a quote, a lot of times we'll say, hey, send us your deck page, because that gives us the information on what you have.
That's
And
on a current refinance.
Yeah.
Okay.
Yeah.
But let's say on a purchase, they're going to buy a new home, and a lot of these first-time home buyers, they don't have any insurance. They've never had homeowners insurance. So
We love first-time home
yeah.
buyers.
So how would you treat them, and what do you ask them?
So we need to know what's in the house, square footage, all that basic information.
And now,
So
do you
we'll
get
ask for
that
a lot.
after the appraisal, or do you get it off the listing ticket that we could send them the purchase
Yes.
agreement and the listing ticket from the
Yes.
agent?
We can work off the MLS listing ticket in that information. And then we'll need their driver's license, that sort of thing. So we
Just
can check.
their number,
Yes.
right, for the quote.
Correct, for the quote.
And then once they put that in place and they say, hey, John, we're going with Cislo on this here, how do they enforce that policy or make it legit net?
That'll just happen. It could be, depending on how it needs to be handled, it could be handled right at closing as part of the closing costs, where we'll collect as a closing company, and not just us, any title company out there. We receive invoices all the time for the homeowner's policy.
Now, would a client, if they're going through you and they're using Cislo for the lender's policy or owner's policy, do you give them a group discount because they're using it for homeowner's insurance policy too? How does that fly?
So we have programs through our carriers that if we, not to quote,
Bundle.
yes, not to quote a certain annoying person on TV every now and then, but yes, you can bundle products, and there are some significant savings along those lines. Really? And that's the one thing we do. We're not just pushing people into a certain product because, hey, we might make more money on it. We push and we investigate to see what works best for the client. And we'll continue to do that. We'll close the house, but we'll contact you quarterly. Hey, have you bought any new vehicles? Have you done, did you add a four-wheeler on there? Did you buy any, new cars that you didn't insure yet? Yeah. That sort of thing. So we continually look to see where we can find not just the best price. I think we all know that the best price doesn't mean the best
Coverage,
product.
right.
Yeah.
It's pretty,
It's
that's
really
pretty
about,
important.
it's very important. And a lot of people, the way it is now on TV, you can just go online and do that. But
Buy what you need. What does that mean?
Okay, so I'll share a story. So my daughter and her husband bought a house last year, and they didn't get occupancy for 60 days. They got the keys in the middle of June, and literally 1 week into being in the house, we had those torrential rains, remember, in June? Mm-hmm. Oakland County was decimated with flooding. Their house flooded 3 times in a week. And it was a split-level home built in the 60s. The lower level was real cute. It had a door to the yard, patio door, fireplace, carpet, paneling. Flooded 3 times. So I told her, I'm like, okay, first, we literally went out there to try to divert water outside. When they bought the house, they knew that they had a couple things in the yard they had to do with drainage. Now we have this flipping disaster because the water was literally coming in the back door. Oh. It wasn't coming up from the sump pump, wasn't coming in from anywhere else. Where else there was so much water so fast, the backyard flooded and the water came right in under the patio door. So I said, well, call a restoration company. Let's get them out there, start drying it out, and you're going to have to call your insurance company, right? She only had $5,000 worth of water backup damage for the lower level. And her previous house was on a slab, so she didn't think of it. I didn't review her policy, right? I mean, she's in her late 20s. This was her second house. She went through a really large company that her employer gave discounts for, and just the remediation alone was about $4,000.
So they gave her the minimum coverage to make the premium look good.
That's correct.
Exactly. And
That's
you go,
exactly
you know
what it
what?
looked like.
Yeah. And I told her, I said, right from there, I said, you should have at least 25 grand worth of coverage. You know, there's a bathroom down there in a family room. It's not a huge house, but, you know, she unfortunately learned a very expensive lesson. So they dried out the basement or the lower level. We had to deal with drainage issues, and she has not even started refurbishing the space yet because it's all going to be out of pocket. So you look at that in Michigan and go, if you have a basement, make sure you have water backup coverage. Review it, and it better mimic the quality of the finishes that you put in your home. Like, for instance, a large home with a finished basement that might have kitchens and bathrooms and pool tables and things of that nature in this market could cost you $100,000 to replace.
If you can find people to do it.
If you can find people to do it. So, you know, I'll actually have to ask my daughter if she needs to get her homeowner's insurance requoted again.
Have her
If
call
she
me.
comes up on her 1-year anniversary.
Danielle, you brought up a good point because we have a lot of clients in this day and age now with the seller's market that are closing on the home and giving these sellers up to 60 days occupancy. But when you are insuring that property, you're insuring it as a primary residence. Are you taking into consideration they will not occupy the property within the first 60 days? And what if something did happen?
Yeah. So, like Danielle mentioned, she called the insurance company. It wasn't that they weren't going to cover it. It was they weren't going to cover that portion of the house because it wasn't insured with that second level.
Right.
So-
Well, no, they were going to offer her $1,500.
Oh, gotcha.
And which didn't even cover the remediation. So
Right.
she did have to fight with them a little bit to get the full $5,000, but that's not going to cover restoring,
Right, right.
the finishes in that lower level.
And in my situation, I think if the sellers are taking occupancy, they need to keep insurance on that property during their time they're living there, wouldn't they? Or does the buyer's
No, because
insurance policy pay for it?
you guys know, in order to actually print your package, you have to have an insurance policy in
Yeah.
place.
So the buyer is the new owner. They will insure the home. Now, as a seller still living in that house for 60 days, shouldn't they almost get like a renter's policy on their belongings? Or if they've bought another house, does that cover their insurance
gap.
cover the gap?
No, because it's insured by the buyer's insurance company. And a lot of times there'll be like a damage escrow that people will ask for that 60 days they're in the house to help cover some of that.
But when you give a quote, you're giving a quote for basically a primary residence because there are different numbers if I was to go buy an investment property. So that didn't matter?
No, I mean, there's a policy on it. They'll cover it. What the key is that it's occupied.
Okay.
So if that seller moved out and nobody knew about it, or if you have a home and you don't occupy it anymore, the insurance company, think about the risk involved with an unoccupied house.
Yeah.
Oh, yeah, huge.
Water burst, pipe burst, nobody's there to turn the water off, that sort of thing. So that's why if you've ever looked for unoccupied home insurance, it's pretty expensive because the risk factor is so much higher.
Okay. Well, we got to wrap up the show here, John. So if you could just let our listeners know if they want to contact you regarding title insurance, create a relationship with a real estate agent or homeowners insurance, what's the best way to get a hold of you?
Probably best way, and I probably shouldn't put it out there, but I'll put my personal cell number out there.
Yeah, sure.
810-625-9815. Again, I've been in the business 32 years, learning every day about the P&C business. And again, we have our partner who's been in it 40 years. So I really like helping people. And the best thing we can do is steer them in the right direction. As you know, we've been here 32 years. We've worked together 20-some. We do it the right way.
You don't make
way.
it this long by doing it the wrong way.
Correct.
Yeah.
Correct.
Danielle.
Then,
go ahead.
I was just going to say, and then Jamie, who is located in our Brighton office, why don't you go and let them know how they can get a hold of you?
Oh, well, I guess my cell phone.
No, you can use the office number.
Use
That's
John's
fine.
cell phone.
Use the office number.
810-588-4302.
If you didn't notice, need people to call me. I don't get called that much, so that's why I put my number out there for everybody.
Danielle, any closing words?
Thank you so much, John and Jamie in Cislo Title and Insurance, for being with us today. We appreciate it and look forward to seeing you at the closing table soon.
Okay.
Thank you.
And thank you, guys. And my name is Victor Bales, my co-host Danielle Boote. And just remember, people, we all got to try to get along. We'll see you next time.